A great pleasure to welcome back to What's Next, Sean Sanders. And Sean is the CEO and founder of Altify. It's a Cape Town-based alternative investing platform that's backed by the JSE-listed Sabvest. Sean, it's good to see you again. How have you been?
Hey, Aki. Yeah, very good, thanks. How's everything been on your side?
Thank God, it's all good, It's interesting, all sorts of different alternative investing platforms. It's something that I'm always actively looking at and diversifying and looking at other investment platforms. Now, Altify is one of those. Who is Altify and what exactly do you offer?
Yeah, sure. That's a good question. So I think you have to go back a couple of years now. So 2 years ago, we formed Altify through a merger. So a Cape Town-based platform called Revix that I started merged with a company based in Austria called Coinpanion. There were two crypto asset brokerage platforms that came together to form Altify. And Altify is ultimately focused on making alternative investments. So those are all the investments outside of the stock market, a lot more accessible for everyday people. And I think the weird thing is that, I come from the investing world where I focused on alternative investments for most of my career. But when you speak to most people, they go, what on earth is an alternative investment? And I think that's the first thing that we need to solve is figuring out or at least communicating what an alternative investment is, why you should be considering these in addition to your stock portfolio or in addition to your bond portfolio. And yeah, that's what we're going to be talking about today. So Altify is here to make investing in these alternatives a lot more accessible. That's why we exist.
Yeah, and I think alternative investment is such an important point that you've just made, and it's important to actually address this, and what exactly is an alternative investment? Let's clarify that because you mentioned you've got your traditional investment that invests in the Satrix or the top 40 indexes, etc. But an alternative investment, you hear about them often. What exactly is an alternative investment? Let's clarify that.
Yeah, so it's probably easiest to start with saying what is not an alternative investment. So if you had to go and invest in, say, that JSE Top 40 Index Fund, that S&P 500 ETF, those are investing in the stock market, right? They're investing in traditional markets, as we'll call them. Alternative investments are not listed on stock exchanges, generally speaking. So you would have, let's say, like real estate is part of the alternative investing world. You would have crypto, which is also part of the alternative investing world. And then you start going into the more institutional investing areas like private equity or private credit, or even investing in, say, infrastructure. Now, if you look at the average investor, the average South African investor has maybe 2% exposure to alternative investments. This is generally through their sort of retirement fund. There's not that much investing happening themselves. They're not going out and necessarily allocating to alternatives, maybe with the exception of crypto. And we've seen how that's changed over the last few years. Crypto is also an alternative investment class, of course. But institutional investors, they allocate a significant portion of their capital to alternatives. So you're talking with the sort of Yale Endowment Fund, close to 90% of that fund is sitting inside alternative investments, also called private market investments. So investment opportunities that don't exist on stock exchanges. And the reason that you see such aggressive exposure to alternatives is because of the diversification benefits. So if you just think about what's happened over the last few months, you can narrow down to the South African perspective. You can look more broadly at everything going on between the US and China. And I guess that's now extending to all the different places around the world. There is a lot of volatility. And you've seen stock market volatility that's probably the most excessive since the likes of COVID. But then you had COVID. Then before that, you had the global financial crisis. And there's always these market stomach churning events that result in a lot of volatility. And ultimately, private market assets or alternative investments, as we call them, they shield you from that volatility. So they protect your wealth over the long term. And I think that's really the key differentiator. Sure, alternatives can provide a really nice sort of kicker to your portfolio. They can provide more returns. But I think the biggest aspect that people need to focus on is that diversification benefit, especially when you start considering the Rand's depreciation over the long term, the fact that the JSE Top 40 hasn't been exactly the star performing index from around the world. So, we ultimately exist as Altify to make investing in alternatives, focusing on, say, crypto, commodities, real estate, etc., significantly more accessible for everyday people.
Yeah, you're actually spot on. Diversification is key here. And I'm heavily invested in stock markets, and the recent few weeks, it's almost been like a yo-yo, and I think, I don't want to do this. I want stability long term. And I don't want all the risk in the stock market. So I do want to diversify. So thanks for explaining that. You mentioned the word private credit earlier that, I've heard before. I'm not 100% sure what it means. What exactly is private credit?
Yeah, so it's crazy. Private credit is the fastest growing investment category that no one outside of the investing world is speaking about. So if you go to the likes of a Bloomberg or Financial Times, I mean, private credit has been the talk of the town for the last few years. And in simple terms, I mean, private credit is exactly what's in the name. It is private debt that is extended from private institutions or private funds to private businesses. So if you want to tap the bond market, as an example, the bond market is public debt. So this is where your likes of, let's say, Woolworths would go out and they'd say, listen, we're raising some money. We're going to use a bond structure to do this. This is all just fancy finance speak for ultimately saying Woolworths is raising money through public markets. So they can go out to, let's say, like the Johannesburg Stock Exchange, and they can look at raising debt capital. Now, after the 2008-2009 financial crisis, you had a significant change in the sort of fixed income market more broadly. And this is where banks stopped stepping in to lend to private businesses. And they effectively became more risk averse. So you'd see banks now only focus on lending to sort of bigger corporations. It meant that a lot of smaller corporations either have to go through a really long vetting process to get the funding that they're after, or they're paying extremely high rates. So if you think about most businesses out there, right, the vast majority, you're talking 90% plus of all businesses out there, they need access to debt. And where do they get this debt? Well, it used to be the banks, and now with the banks not necessarily lending in the way that they used to, these private credit funds have effectively emerged, and they're ultimately providing that debt capital. So in simple terms, a private credit fund would pool capital from various investors together. This is usually high net worth individuals or bigger endowments or pension funds. They'll pull that capital together and then they'll lend to various businesses. The businesses generally that they understand and that they go through, a thorough vetting process. And the idea with private credit really is that you don't have, the savings that are sitting at banks being lent out in a fractional basis to different businesses. So it's actually a little bit more secure than bank lending. But it means that these private businesses, can get the capital. That means they can grow in the way that they want, and they can provide a more attractive return to the investors in private credit. So in simple terms, I mean, private credit is investing in debt. So you act a little bit like the bank lending to businesses directly, and you'll never
Okay.
generally lend to one business. You'd lend to, hundreds or thousands of businesses, and diversification when it comes to private credit is absolutely essential. I think the last thing that I'll note here is you can kind of think about generally investing in private credit is like investing in, say, that JSE Top 40 index fund. The difference here is that you're not buying equity of all these different businesses. You're rather buying a portion of the debt that these different businesses have. And you actually sit higher in the capital structure. So if a business ever had to go under, they repay the debtors before they'll end up repaying any equity holders. So that is something also just quite important to understand when it comes to private credit.
And then, of course, the people who do get the credit are very, very strongly vetted. They're established organizations, so there's a relative safety about the money being used to. I mean, nothing in life is guaranteed, I guess, but which businesses are going to be getting that credit, so they've got an established track record. So your private credit investment offering, can you tell us a little bit more about that? Because you're
Yeah.
doing that as well.
We are. So we've taken a single step in this direction. I think there are so many more steps to come. So just watch the space with Altify. But what we did is we partnered up with a UK firm, a UK specialist lender called Fenchurch Legal. Now, what Fenchurch Legal does is they effectively lend to various UK law firms. And the way that the structure works ultimately is that a UK law firm could have a consumer that comes along, and let's say, Aki, this is you. You've just bought a brand new apartment. And when you move into that apartment, you notice, well, I had definitely signed an agreement to say that I'll have windows and I'll have ceiling boards and I'll have, say like my pool filled with water. But when I move in, for some reason, none of this is in place. And you then have an option. You have an option to either take legal action against the seller of the property, or alternatively, you can just say, well, listen, this is going to be a massive pain. I'm going to rather take on this myself and I'm just going to repair everything myself. Now, in the UK, Fenchurch Legal have carved out this really interesting niche where they'll lend to law firms that have these sorts of cases. So a really high probability of winning, generally sort of 3,000 to maybe 4,500 pounds in value. So that's sort of maximum around about 100,000 Rand in value, and where they can obtain this really special type of insurance called after the event insurance. So there's actually an insurance market when it comes to legal cases where you can take out insurance, where if the case doesn't go your way, you can receive some sort of a payout. So in short, what Fenchurch Legal has done is in the UK, they've extended over 15,000 loans to different vetted UK law firms. And those law firms are forced to take on this ATE insurance. They're also forced to provide director guarantees in order for the debt that they take on to be approved by Fenchurch Legal. And what we've been able to do is we've been able to take an allocation of Fenchurch Legal's private credit fund, which is structured as a note, a 2-year note. And I don't want to get into too much details around that. But yeah, ultimately, you've got an investment into a portion of this private credit fund that Fenchurch Legal have set up. You earn an 11% US dollar return. And yes, that's a real 11% US dollar return by investing in this fund. There is the risk, and I think it's very important whenever you talk about private credit. Of course, there are the risks when it comes to investing, but the risk's very different to investing in the stock market. Here you have something what is called illiquidity risk. That is where your funds are locked up for an extended period of time. And of course, in the absolute worst case scenario, I mean, this isn't a risk-free investment. There is a risk that capital could be lost if there was some disastrous event. But Fenchurch Legal have never missed a repayment. So, we've had the private credit product that we've been offering to our customers running now for, going on a year. Fenchurch Legal have been operating since 2018, and every single quarter they provide interest distributions to various users. And so what we've done is we've ultimately tokenized this private credit offering that Fenchurch has. And by tokenizing it, we've brought down that minimum investment from $50,000, so, nearly R1 million, to just $100, so roughly 1,850 Rand at the time of writing. So what we're trying to do is we're looking to make this asset class a lot more accessible. And this is a very niche area, right? You're investing in a portfolio of loans extended to various law firms based in the UK. And these are all vetted law firms. And in return, you're earning a very attractive return. You're getting great diversification because, this portfolio of loans to law firms isn't exactly correlated to the stock market. If the economy had to collapse, you've probably got more legal cases than less legal cases. So it's a little uncorrelated to the economy. So there's fantastic diversification benefits. There's a Rand hedge automatically built into the investment because you're investing in something that's dollar related. And from my perspective, it's one of the most interesting investments that I've ever looked at. And I think the real risk that we see as well, and this isn't necessarily a financial risk, it's more of a risk for the business really, is that this is something that, couldn't scale necessarily to hundreds of millions of dollars every single month, but could scale to certainly like $5 million of capital being allocated every single month. So it's a really small niche area that we're excited about to offer our customers. So this is what we're speaking about.
Listen, it's pretty cool. And I'm thinking about it and I'm saying, well, it makes a lot of sense. My question is, you talk about these UK law firms, right? Why do these UK law firms not go to a bank direct to get a loan, for example?
Yeah, very good question. A lot of the UK law firms do go to banks. I think the big challenge, though, is, as we all know, if you go to a bank and you don't have hard collateral, right? You don't have machinery, you don't have a building, you don't have something that the bank could actually seize, it makes the lending process a lot more difficult. So that means it'll take a lot longer to actually obtain your loan. You potentially be paying a lot higher. So what Fenchurch Legal does as a specialist lender in the legal finance space is they actually would take direct ownership of the underlying legal case if, for whatever reason, the law firm wasn't able to pay. So you've got the insurance protection, that after the event insurance protection, you've got director guarantees, and then Fenchurch Legal are actually able to go and seize the underlying legal case if needed. Banks, unfortunately, just can't do that. So that's why Fenchurch have been able to sort of carve out this really interesting niche within legal finance. And I think what's also interesting is that Fenchurch have been able to take what is traditionally quite a high-risk investment category. If you can imagine legal finance or litigation finance, which is this little niche within private credit, historically, this was sort of these really high payout, high risk sort of setups. You would go and you'd have a class action lawsuit that would be funded by various parties. And there's the small probability or an unknown probability of that lawsuit going your way. With Fenchurch Legal, I mean, these are established cases. You're generally looking at, cases with very strong precedent. Otherwise, why would that law firm look to take on that case themselves and take on funding in order to fund this particular case? Because the law firm's business model is pretty straightforward. The law firm would take on this debt, and they would then take a big portion of the winnings when they actually succeed in this case. And the winnings would be covering all of the loss of that individual that's looking for sort of a legal claim, and then obviously a big portion of the proceeds that would come from that as well. So ultimately, it's a
Yes.
fascinating investment category that I think Fenchurch have been able to change the structure of quite significantly to make it a lot more accessible, I suppose, and a lot lower risk. So
Yeah.
they're a lot more retail friendly.
Yes, I mean the risk for me is the low risk is quite attractive. When you look at the amounts and the investment amounts that you guys at Altify offer, what's kind of the minimum investment amount that you can put forward with Altify?
Yeah, so we've pushed to lower this as much as possible. And that's really because we want people just to try this out. Like, at the end of the day, it's an interesting category of investing. It's something that's going to be very unfamiliar to a lot of people. So we've lowered it all the way to $100, or the equivalent of $100. This is about 1,850 Rand to get started. And I mean, yeah, it's free to open an Altify account. You can obviously go to our website, which is altify.app. You can sign up for an account there. We've got a mobile app that you could download. We've got a web platform as well that you can, of course, access. You'd verify your account just like you would do with any other licensed financial institution. We've created a very sort of quick and efficient verification process. And then what you'd need to do for our private credit offering in particular is you'd need to buy $100 worth of a stable coin. So because we've tokenized the investment, because we've tokenized the Fenchurch legal offering, you would be buying effectively a security token representing the value of that private credit investment. And so you would convert your USDC or USDT that you purchase on the platform for an Alfi token, which is this Altify legal finance note that we offer to our users. We've also got a variety of other investment opportunities, all starting with actually lower investment amounts. So you can get started with just $10. So we've got tokenized gold, that is physical gold, through Paxos G or Paxos Gold, where ultimately one token is equivalent to 1 ounce of physical gold. So this is also very similar. You can imagine with the Fenchurch offering, you've got this bond note ultimately, or this loan note that has been tokenized, where $1 of that loan note is equivalent to 1 token. With PaxG, you've got 1 ounce of physical gold held in a London Brinks vault, which has been tokenized and is equivalent to 1 PaxG token. So you can actually purchase this on the platform as well. And in South Africa, I mean, what an absolute dream. You don't have to then worry about the insurance. There isn't any insurance cost that comes with that. There's no additional custody cost. It's completely free to hold on a month-to-month basis. So we offer that on the platform. We've got about 50 standalone cryptocurrencies that you can choose from. So if investing in the likes of Bitcoin or Ethereum or Solana or one of the other crypto assets is of interest, you can obviously go ahead and do that. And then through the prior company that that I started, that then merged with CoinPanion to form Altify through Redux, we specialized in offering these ETF-like products in the crypto space. So you could invest in, say, the top 10 largest cryptocurrencies, or maybe the top 20, or a niche sector within the crypto space, like the decentralized finance or DeFi sector. So if you were wanting to invest in the crypto space like you invest in, say, the stock market through these diversified index fund-like products, that is what you would be able to get then with Altify. So a whole variety of different products, and just so many more coming over the coming months. I mean, we want to introduce real estate, private credit, private equity, all of these other alternatives, and just make them a lot more accessible. So we're not having, discussions like this where it's, oh, what is an alternative? It's more a case of, well, here are the benefits of the alternatives, and here's all the different products that we have to offer.
Altify.app is the website address of Sean's company, who is the CEO and founder of Altify, talking about alternative investing, and it certainly opened my eyes. I'm certainly going to take a look. It's absolutely a fascinating world when you look at the alternative investments and how affordable they are for people in terms of what's your minimal investment size that you can make. Sean, it's always good to chat to you and check about these alternatives and different ways of investing. Thank you for your time.
Okay, thank you so much. All the best. Speak soon.